Ever since the Bitcoin ETF got approved, the price of Bitcoin just hit a pause and might be starting a correction. And what's crazy is that we had exactly the same thing happen in the two previous cycles with Bitcoin. And you'll see it's surgical. So let's take a look at Bitcoin together from a graphical standpoint. See what happened in the past on the previous two cycles and try to figure out what will happen here with Bitcoin in the coming weeks and months. If you're interested, we can do it now. Hey everyone, welcome to the Road to Millions channel. Today we're back for a new video. And if you enjoy this kind of videos and the content of this video, I invite you to let me know by dropping a like, a little comment to give some support. And if you're new to the channel, welcome aboard. Don't forget to go under this video, subscribe and hit the notification bell so you don't miss any of the videos. Today we're going to do a little recap. A bunch of you actually suggested it in the comments and asked me if I could do a rundown on Bitcoin, see what happened with the approval of the ETFs. Well, that's exactly what we're going to do today. So it hasn't escaped anyone's notice, but since the approval of Bitcoin ETFs here, well, we've had a little local peak and a correction on Bitcoin. And a lot of people are wondering, are we not going to have a more pronounced correction? And to be honest with you, I'm not making this up. Someone shared this graph with me here, they sent it to me, and it caught my attention. I wanted to talk about it with you. We can see that in the two previous cycles, just before the halving, we had a first phase of bullish rally. Then right when we reached the 0.618 Fibonacci level, well, we had a correction, and then we started again before or just after the halving. It's really incredible. We're actually reproducing the exact same thing. You'll see, honestly, it's just mind-blowing. So here we have the Bitcoin price with the all-time high right there, and then we're going to use the Fibonacci retracement tool. So here's the thing, I'm not a technical analysis pro, but it's a tool that allows us to see what percentage we're at compared to, for example, the previous all-time high on Bitcoin. And there are some interesting points of confluence where we usually see activity. Either we can hold the price and find support during a correction, or sometimes find resistance when we're in an upward phase. So here we're going to deploy the Fibonacci tool, and we can see that right here at the 0.618 level, we had a bounce during this first correction phase that stopped right at the 0.618 level. We got the rest of the correction and a rebound here, and look, we just hit our local top right at the Fibonacci 0.618 level. And we've already had the same thing in previous cycles with a recovery in prices, finding a strong point here at the local high of 0.68, followed by a correction before resuming the upward trend to break the historical high around the halving or after the halving. We're going to take a look at what happened in the previous cycle, and we're going to deploy the Fibonacci retracement tool again. We're going to take here the top, that is to say the highest point, which was around $20,000. We're going to extend it all the way down to the lowest level here. And what we can notice is that we had exactly the same thing. We had a fall, a complete correction, and then we had a first rally, which means a first increase, but it was still quite far from the halving. And we hit the 0.618 spot on. Here we had a correction. I'm obviously excluding here this black swan event, the COVID crash. So we had a correction and then we bounced back up. Once we're back on the road, well, that's it, where we came to break records historically. And to see a little more clearly, I'm going to show here the lines that indicate the halvings. Here you can see that the halving, it's here, and that our correction has happened and that our local top has happened before the halving. So before the halving, we already had a first rise, a correction, and then a bullish recovery. And we're going to take another look at what happened during the second bull run before the one we're currently experiencing. And we're going to bust out the Fibonacci retracement tool again. We're going to take it here at the high point, which was around $1,000, a little between $1,000 and $1,200. And we're going to bring him down to the lowest point. And what we can notice once again, and we had our peak, the end of this cycle. Then, once the correction has been digested, once we've found our bottom, we had a first bullish rally, which came here and hit 0.618 at the Fibonacci retracement level, a correction, and then a resumption of the rise that came this time to break the old historical peak. So, it's happened twice now, right before the halving, with a retracement at the 0.618 level. Now let's take a look at the type of correction we had to deal with at those two moments and see what could happen today. So here, when we hit the $777 mark, we experienced a correction in Bitcoin with a sudden drop right here at one point, a flash crash, and we even went as far as to reach a decrease of 40% in a short period of time. What happened in the next cycle when we hit around $14,000? Here we had an extreme retracement because we had the COVID crash here, but still a retracement of about 50% compared to the local top. And now today we are in a configuration where we have reached the 0.618 Fibonacci level, and we will see how far we could go down if we had a larger correction. Now, I'm not saying that we will have a larger correction, not at all, to be honest, I don't know. And it's precisely because of this uncertainty that I explained to you a few days ago that I sold some of my cryptos. 20% of my total capital in crypto, because there was precisely this phase of uncertainty related to Bitcoin, related to the halving. That was annoying me, that I preferred to lighten up in case we had a correction, a local top, a correction that would no longer be marked. If we had a correction that wasn't in the range of 40 to 50% anymore, of course I would have a nice stash of stablecoin to be able to get back into cryptos, get back into Bitcoin at discounted prices. Now, if this correction doesn't happen, it's no big deal. I'm really happy with the gains I've been able to make so far, and I still have 80% of my cryptos that are still in play no matter what. So there you have it. I don't know what's going to happen. I'm just looking at what happened in the past to try to draw conclusions or to try to identify a trend on what might happen today. Anyway, I've taken my precautions. We'll see what happens. Depending on what's going on, I'll figure it out. But what could happen? What could happen if we had a condition similar to what we had the previous two times? If we look, we have several points of confluence. I'm going to enlarge it a little bit. And well, that would give us a correction here of about minus 35%. If we had to have a marked correction and find support in one place, for me it would be the best place around $31,000 to $32,000. Why? Because here we had once some support. Once you've gone under, well, it acts as a resistance once you're here with several bumps twice, 3 times, and once you've gotten out of it, you have a nice acceleration. So for me, if we were to have a correction and come here, bam, sit on this support before going back up, that would be a really perfect scenario. Just so you have an idea, the halving is expected to happen around here. So there, it gives us a correction of around minus 35%. That doesn't seem crazy to me considering the increase we've had here in a year. It would piss me off temporarily like everyone else, but it would make sense. And if we were to have a more pronounced correction, it could come in a second area that would also make sense from a graphical standpoint with the levels of resistance and support. Here at $25,000, we would be looking at least a 50% decrease because we had a little bump here that acted as a resistance also here. And once we got over it, you see, we had a range. We bounced back and forth a number of times between the two. So here, in the event of an ultimate retracement, that's not the scenario I'm envisioning the most, here to go back to $25,000. But if we were to go back to $25,000, it would be a golden opportunity for me to get back into Bitcoin. And me, my stable coins, I would be very happy to reuse them. Can you imagine selling a Bitcoin here? I sold it for around $44,000, let's say almost $50,000. That would allow me to buy 2 Bitcoins here for $25,000 each. It would be a dream opportunity, but I don't really believe it. If there were to be a big correction, I can see it stopping around $31,000, and even that kind of correction, I don't really see it coming. But like I said, I don't know anything. I'm in the dark just like everyone else. That's why I've taken precautions. Anyway, you got to keep that in mind, not end up empty-handed if it were to happen, not be too surprised. To have corrections on assets that have skyrocketed like that in just 1 year, making 200%, it would be completely normal to see a correction of less than 35% or even more. Sure, in the short term it would be scary, but it's something that you have to keep in mind. It's already happened twice in the past with Bitcoin, with cryptos, and it wouldn't surprise me if it could happen again. Tell me in the comments what you think of this theory, this analysis about the fact that it happened twice exactly the same way in the previous cycles on Bitcoin. The halving is getting closer and closer. There are some really big investments happening in the Bitcoin ETF, I believe the buying volumes on this Bitcoin ETF are historic. So after a while, with the supply being limited, we run the risk of drying up the Bitcoins available on the market, and that could mechanically push up the price of Bitcoin. On the upswing, that's the theory. Now you gotta know that big companies like BlackRock have heavily invested in the whole Bitcoin mining business. So I wouldn't be surprised if they eventually have some hidden contracts under the table with these Bitcoin mining companies, allowing them to ultimately buy Bitcoin OTC, meaning under the radar, off the books, directly through these Bitcoin mining farms. And what ultimately means that it wouldn't directly impact right from the start the supply that is liquid on the markets, the exchanges. So there you have it. That's my theory. So that's my little clarification here on Bitcoin. No certainty, rather even uncertainty. I want to be honest with you. I'm not a Nostradamus. So now I'm feeling calm about the future, even if we're going through a big correction here. It'll annoy me a bit in the short term, but it won't completely destroy me mentally because, you know, the profits will have been taken. That's it for this little video. If you enjoyed it, don't hesitate to drop a little like, a little comment for support. See you tomorrow for the next video. Hey there.